look for opportunity to take a long or short position for profit. Okay, so let's pull up a random chart. Pull up, let's see, let's do USD JPY. All right. All right. So first things first, what we do is find strong, valid areas of support resistance using the higher time frames, such as the weekly and the daily. Anything lower, we don't really care. Unless, when it comes down to finding, just a better entry. But until price actually gets to these weekly and daily support resistance areas, we don't really care what the market is doing in between time, because only at these zones, only at these areas of support resistance on the higher time frames, um, are we interested in taking a position, because we're going to get the biggest reaction, you know. So I mean, that's pretty much common sense. Get rid of these lines here. Okay, so weekly, what can you see that stands out? Support resistance is where the market, you know, comes up to, and it'll bounce from and go back down, or come down to, bounce from, and go back up. Really simple, okay? Really simple concept. But, some people have a problem identifying, or they're finding support resistance areas on too low a time frame, in which, it really doesn't matter. The only ones we care about are the higher time frames. All right. So here's the weekly. Here's a very obvious one. All right. Very obvious for very obvious reasons. Big reaction here on the weekly. Big reaction. Um, this is each candle takes a week to form. So for what? Let's say a couple months, price could not break through here, and it rallied back up. All right. So came down, bounced up, all right, and in this case came up and bounced down. Very strong area, all right. But we don't care what's happening, and that's the other thing. We don't care what's happening 1,000, 2,000 pips away from where current market price is. We want to stay within range, within trading range, within the next 300 to 500 pips, okay, to look for opportunity. We're not going to be waiting 1,000 pips for market to come to a specific area. We want to, be relatively close. So here's another weekly. Here's another weekly area for very obvious reasons. Market came down, reacted, went up, broke through, and is testing the underside of this, and has been dropping since. We scroll back, you'll see the market right here broke through, came up, retested that area, and dropped. Broke through, came down, retested that area, and rallied. All right, very valid. And we'll scroll all the way back, same thing, reacted to this same area. So that's what you want to look for on a weekly, daily, and that's it. Anything lower doesn't matter. All right, we only care about when price reaches these weekly and daily support resistance areas. Here's another one. Obvious, very obvious, right? Can move that there. And another very obvious one on the daily. Put that there, right? Now here's the thing. Here is where things start to, be kind of kind of a magical aha moment. All right, so let's even delete this support resistance area. Let's just focus on this one. All right, so we've seen consistently market came up, bounce, 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 and this one right here, major support area, came through, broke through, retested, bounced, 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 broke through, came down, retested, bounced. It's very valid area. Came down, bounced, broke through, retested here, bounced down. And just so you know, this is the daily chart. So from here to here is like 180 pips. All right. Came through, broke through, came down, retested that area, and rallied on a good 300 pips. So one of the things that I like to do, and and like I said, daily is as low as you want to go as far as finding valid support resistance areas. One of the things I like to do is just measure out that first initial support resistance zone. Okay, so this is a very valid one. This is a very valid one. All right, let's just take a look at what the distance is between them. About a good 300 pips. Okay, about a good 300 pips is the distance. So let's measure out another 300 pips. This is something that's, I find very valid in finding support resistance zones. So what I'll do is measure out another 300 pips or so, 320 pips or so, which is at the price point of 107.82, 107.88, 107.82. So let's bring another one on. And this is no coincidence. Notice what happens. 107.97. Okay, 107.97. And what do you know? Equal distance, and there's another support area. Support, broke through, retested, resistance, support back here. And all I did was measure the first two between there and there, measured, copied it, and it's also there. Let's go back and see if it's valid. Coincidence? Not at all. Broke through that area, retested it right there, and fell. Came up to that same zone. And it's not going to be precise, people. You have to understand, oh, well, it missed it by 20 or 30 pips, or it's a zone. It's not going to be to the pip every time. It's an area, okay? Came up to that area, fell. Came up, blasted right through it, and as you can see on the very next candle with that wick, retested that same area of support resistance and rallied for a good 700, 800 pips or so. So, again, very valid way to find support resistance. And let's just scroll back further. Look, you can scroll back forever and price is going to repeatedly respect these areas. Bounce, bounce, bounce. And all I did was, as you guys seen, off the higher time frame, daily and weekly, set my lines. It came down to the daily, right? Came down to the daily. I measured from here to here. I came down to the daily, set my support resistance based on that big reaction, set my support resistance line here based on that reaction, measured between the two, and duplicated down here. And what do you know, had the same type of reaction. Not a coincidence. Let's just pull up another random pair. Let's pull up pound AUD. Let's pull up pound AUD. All right. So notice I'm on the weekly. Pound AUD on the weekly. All right. So that's where we start. And looking at where current price is, right there, okay? We only care about support resistance areas that are relatively close to where current market price is, so we can find our trading opportunities to get in the market within the week. All right? So, obvious. Can anyone guess where I'm going to put this support resistance line based on support resistance being defined by where the market comes down to, reacts, and bounces back up, or comes up to, bounces, and goes back down? Major areas, not little tiny little eensy weensy waves. Only the major areas is all that we care about. Boom. Okay, boom, we are there. We are there. Weekly chart came down, reacted, rallied for over 2,000 pips, came through, blasted, slammed through. All right, and now came back up, and we are at that same area. This support resistance area is valid due to the multiple reactions to this area. I already know it's got multiple reactions just because of the fact that it was such a huge reaction here. All right, so as you can see in history, came down, bounced, went up. Came up, reacted to that area, went down. Came down, broke through, came up, reacted to that area, went down. Let's scroll back some more. Oh, came down, blasted through, came up, retested that area, went down. Let's go see if we can scroll back a little further. That's as far back. Came down just, within the zone and went up. All right, so very major weekly. Let's drop down to the daily. Applying the same idea I did before, which is obviously on the daily, we're going to mark that off, right? By definition of what support resistance is, where the market came up to, reacted, and fell in a very exaggerated way, or came down to and rallied. So that being said, we'll mark that off. Let's see. Mark another one off. All right, and kind of tighten it up on the daily. All right, so I'm able to eyeball these exact areas just from experience, but we can even actually bring it up to here, bring this one up to here. Okay, bring that down to there, and let's measure that out. It's roughly about 300 pips away. We can actually duplicate that distance. Just over 300 pips away. And what do you know? What do you know? You think it's a coincidence that we've got some reaction going on here? Support resistance? I don't think it's a, I don't think it's a coincidence. In fact, I know it's not a coincidence due to the fact that, let's scroll back. Oh, wow. Any coincidence? Market came to this zone, this area, rallied. Straighten the candles out. Came through, kind of played with that area. Then fell, came up, reacted to that area, then fell, came up, blasted through that area, retested it, went up. And just to be clear, it's a good 150 pips, okay, for that small move. Came down, retested that area, fell. It's a good just over 270 pips there. So we find our strong support resistance areas, as you can see, on the higher time frame, daily and weekly. Then of course, you would come down to lower time frames like the 1 hour, and things like that to find your entries and reason for entry, depending on what the market does at these areas. And there's ways to determine which way to trade the market, when price actually gets to these areas, as these chapters progress, there's ways to figure out, very simple ways to determine, hey, is the market gonna react here for me to go long, or is it gonna blast right through, retest the area, and go short? There's a very simple way to determine that. Very simple. And repeat it over and over. Even here, when the market came up here, there's a very simple way to determine whether or not it was going to respect this area, or respect this area and drop back down, or blast right through and go back up to the next support resistance area. But there's, trading is not a rush. It can't be rushed. And most people try to rush it, and that's why they lose money, and that's why they blow their accounts, because they try to rush the process in regards to how to apply certain techniques. So that is support resistance, basically. Very simple. That's how you find it, where the market, not the little tiny waves, not little tiny waves like here and or here. I mean, although they're valid areas, but you don't want to have lines all over your chart, like a billion lines. That's only focus on the major areas. Notice this is obviously very major. Boom, right? Came up here and dropped ever since, over 1,000 pips. Very obvious support resistance area. This is valid because obviously, look, these are days, okay? Days. Each candle, this is the daily chart, days. The market was trapped in the range from here to here for a month. It was trapped. So that's obviously very valid. And, market came up here, dropped, came up here again, dropped. So that's very, obviously valid for those reasons. So, and again, we only care about looking for opportunities to enter the market, long or short, when price comes to these areas of these daily and weekly support resistance areas. How we enter, how we enter trade and determine if we're going to enter, you'll find on the later chapters after this chapter. So that pretty much concludes how you properly find support resistance areas. Only caring about what's happening on the daily and the weekly and the major bounces, not the little tiny baby waves like here and here and here. No, we only care about here and here and here, and obviously here and here. Like, for example, boom. Why? Because the market came up, major wave on the daily, and reacted. And back here came down and reacted. Broke through, retested, dropped. Broke through, retested, rallied, broke through, retested, dropped. So even here, came up, reacted, dropped 300 pips, broke through, retested, rallied over 1,000 pips. So obviously the daily and weekly support resistance areas are the only areas that we care about, which we can pull the most out of the market. So that concludes support resistance. The next chapter we will be covering